morning, friends. Today is Tuesday, July 5th. I hope everyone had a great 4th of July holiday. At any rate, it's a new week, so let's get started. Today, Tuesday, July 5th, there are no announcements that are going to be market moving, so let's move over to the morning news. And looking at the CNBC flags, everything is in the red. Futures, S&P futures are down 47 points. The 10-year Treasury, fortunately for many borrowers, is down to 2.815 on the 10-year note, and oil hasn't moved much over the weekend. So let's move over to our chart. This is the S&P E-mini from Friday, and I want to make a point in this short video. One of the things I always say in my videos, and particularly in my trading course, is you need to use a lot of patience when you're trading, because many times the market will try to fake you out and you will take a trade that is in your financial, well, not in your financial best interest, let's say. So let me illustrate that through the chart and price action on Friday. Now the market started out immediately fading the gap and then actually filled the gap and then continued down, but then a quick burst up for about 10, 20, 30 points up within just a few minutes. And this could have given people who are inexperienced, given traders, the idea that the market was going to go up, especially since it was a holiday weekend coming up. But if you were patient, and look, if you jumped on and you made 30 points, that's great, that's great. But look what happened at 10 o'clock, or just before 10 o'clock, the market stalled, and then immediately began a pretty steep dive of 55 points down to 38.57, 38.58. And these trades, well, this momentum trade up was a good guess, and the one down gave you a little more insight, because remember, at the start of the day, the start of the trading day, that's when you know the least about the market, the least, because the price action hasn't given you any indication. If you have the previous day's close on your chart, which I have here, this black horizontal line, and you have the trading zone delineated on your chart. Most of you don't, but still in all, these are tools that you use to give you an indication of where the market is likely to go. So these first two moves, these impulse moves of the day, the first one was a pure guess. The second one was a better price setup, especially when you see the long shadow up here at the 957 candle. This is a 3-minute chart, and there are 10 points between each horizontal line. The momentum move to the downside was a great trade, and if you caught that, congratulations, you did very well. But if you were more of a cautious trader, and I think most people are cautious traders, you could have waited to see how the day shook out. And look what happened here, beginning at just about 10:30. And I'm going to just, picture being worth 1,000 words. I'm going to do this. Okay? So, right over here by, little after 1 o'clock, I say 1:15 Eastern time, we can see that there was a support put in by price action. And at this point, taking a trade to the upside would have been a low risk, high probability trade. So if you're a cautious trader, you can use patience to observe the market. Don't be tempted to jump on. Sure, these are great trades. This is a great trade. But again, it's for more experienced people who are market observers, and they know what they're looking for. They know the tricks that the market plays on people, and they jump on. And you could be right, you could be wrong, but it's better to wait for a price setup that gives you a really strong indication of which way the market wants to go. And the market did want to go up, did indeed want to go up. I would expect that people who bought at the open and held on over here were pretty much, or maybe they just left their computer for the day. A lot of people do that because they get bored. Bad idea. If they came back at around 10, 11 o'clock in the morning and they saw they were 60 points underwater, they would have had a pretty lousy holiday weekend. But still in all, wait for, if you use patience, you wait for the signals to give you a strong indication which way the market is going to move. So that's my video for today, Tuesday, July 5th. Thanks so much for watching Trade with Lots of Patience. This is Marv Eisen for Timeless Dollar, and if you're looking for a little bit of help on trading E-minis and micro E-minis, check out my course at timelessdollar.com. Anyway, thanks again for watching. See you in my next video.